Hey, what's up, everybody? It is Monday, August 19th. Monday. Just sent out the new edition of MMT Trader. If you want to get a copy of that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. All right, hey, remember last week, Thursday, when I told you I was walking my dog, felt my phone ringing in my pocket, took out the phone. It was from my local Fox TV station. Say, hey Mike, can you come on? The market's crashing. Can you talk to us about the market crashing? So I went on there. That was after that 800-point down day. And I said, look, sometimes the stock market does this. People get scared. People get panicky. People get frightened. History has shown, and not just history, I've spoken about this, but you got to buy during those times. It is a gift. That was a very prescient call. And the next day in the morning, I sent out an email telling my subscribers that the worst was over. I did a video here Friday saying the worst was over. We were up Friday, we're up today. Let's talk, by the way, let's go back. Can we rewind for a second and talk about my August 8th buy window? Remember, I came out with that date way back on June 26th. On June 26th, I said the market would have a difficult time rising further for a period of weeks because we had hit what I called reserve trough. Remember, I've been talking a lot about these reserve flows. That is the bank reserves, reserves flowing between the Treasury and Fed activity into the banking system and then back again. And this causes banks to have to adjust their asset composition. And this is known information. We can know this in advance because government spending is very, very stable and predictable. So we know these flows. We know taxation when taxes hit. And these are tradable movements. I've said this. Some of you have taken advantage of this and have become subscribers to my service, and I'm the only one who really follows this stuff and really has a deep, deep fundamental understanding of this. But I've said before, this is like inside information, but it is totally legal. We're talking about tens of billions, hundreds of billions daily flowing into the banking system. Now, I've been all over this. Anyway, on June 26th, based on these reserve flow cycles, I said the market would have a hard time moving higher for a period of weeks because we were in reserve trough. We had to wait for reserve peak, and I said that would happen on August 8th, and that would create the buy window. And that may still end up to be the perfect day of the turnaround. Because in the early morning of August 8th, the S&P hit 2775. That was a 600-point early morning downdraft. We went up for the next couple of days, and then we had that really bad week last week, right, culminating on, when was it, Wednesday or something, with the 800-point down day. But we did not revisit that 2775. Anyway, August 8th, it still may end up to be, that was my original call, the buy window may end up to be absolutely perfect. Can we talk about this recession stuff? Now, I've gone on record, I said if there is a recession, you could throw every criticism at me that you absolutely want. I'm saying there's not. In the latest banking data, which of course I go through in extensive detail in my weekly report, bank credit at a new high, new all-time high, and rising at the fastest rate in 30 months. Loans and leases, new all-time high, rising at the fastest rate in 2 months. Commercial and industrial loans, all-time high, rising at the fastest rate in 5 weeks. Consumer loans, all-time high, rising at the fastest rate in 5 months. You get the picture here? I'm not just talking about the nominal level of loans. I'm also talking about the growth rate, the second derivative. Now, if we were in a recession, or even if we were just in a recessionary environment, a slowdown leading to a recession. It's very curious, but I would wager to guess that we would not see acceleration in the banking metrics. Credit demand rising sharply. I mean, think about it. You don't hear this stuff out there. You do not hear this stuff out there. But the stuff I focus on, the understandings that I bring in my report and just through MMT are completely outside of the mainstream, and they're correct. Now, sometimes it takes time to manifest, but they are correct. Anyway, just thought I'd bring that up. A lot of other stuff in the report today. Looked at gold in the week ending August 13th. Producers were net buyers of gold. We saw gold trade in that week. The December gold contract traded down to a low of 1484 and a high of 1546. So I would say anything below 1500, gold producers who are normally sellers of gold, to lock in because they own the physical metal, they were net buyers. So I would say below 1500, they obviously saw some value there. And oil producers are net long. They've been net long for 11 weeks straight. The last time that happened, a string of a period of time where oil producers were net long was late November, I believe November 20th to December 31st. They were buying in that last plunge of oil prices in the fourth quarter of last year. And what happened after that? That went on to rally about 50%, the price of oil. So, just saying. Anyway, a lot of stuff like that. I just want to let you know that the new edition of MMT Trader is out. If you want it, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. See everybody tomorrow. Bye.